Crypto Caesar Capital. Hope you're well. It's the 27th of January 2026, and we're going to do a video on Bitcoin and where we think we are at the moment. Now, my last video, I stated that I thought the likelihood was that we were in a bear market, giving it a 70-30% in favor. So 70% in favor of a bear market, 30% not. There are some things that suggest to me that we're rolling over into a bear market, and that's really the price action and how it's being so slow and weak, and it's just not looking very strong at the moment. Plus, we've got the 4-year cycle, so it's kind of rolling over. So that's why I give it a 70% chance of a bear market. So I will position myself accordingly in relation to that. However, I think that there's going to be a decent bounce before the price ultimately rolls over into a bear market. And what we're going to look at today is we're going to look at where we think, or where I think the price will go when it ultimately rolls over, but where the price will go before Bitcoin ultimately rolls over into a bear market. Now, the first thing we're going to look at is the 200-day moving average. Okay, I covered this in my last video, but the 200-day moving average is pretty important because once an asset or a stock or a cryptocurrency can get above the 200-day moving average, that suggests that the trend is up. As you can see here, we bottomed out in October, November 2022. Bitcoin was then able to get above the 200-day moving average and remain above it, although there were some very brief episodes of a few weeks below it. But generally speaking, it was getting above the 200-day moving average. And most importantly, the 200-day moving average was postured to the upside all the way through this move. But here you can see that the 200-day is actually now postured to the downside, so it's moving down. So that indicates to me that there's a change in trend, and we are now potentially moving in towards a bear market for Bitcoin. However, I think that there's going to be, like I said in my last video, I think there's going to be an attempt of the price to get above the 200-day moving average, and if it's a bear market, then that will be the ultimate signal that we are in a bear market if it rejects from the 200-day moving average. The 200-day moving average at the moment is at about 104, 105. It's postured to the downside. Depends, which chart you're looking at, but it's about 104, 105. But like I said in the last video, there are, in Bitcoin's history, and Bitcoin is a very cyclical asset. In Bitcoin's history, there have been multiple occasions, if not every single bear market, where Bitcoin essentially rolls over into a bear market, but then comes back up to test the 200-day moving average, and ultimately gets rejected and then rolls over. But as you can see here, this is the 2021 beginning of the bear market. So we had our ultimate high in November 21. Price comes down, makes a low at about 33K, but then it comes back up, and by about March time, it tags the 200-day, doesn't want to get above it because 200 days saying trend is over, trend pointing downwards, and then it comes down for its ultimate low in November 2022. Another example in the previous cycle to that, so ultimate high in 2017 of around about 20K or thereabouts. Price comes right down, and then it tests the 200-day moving average, rejects, comes down, tests it again, in fact, down, tests it again, and then ultimately makes its low. So on that occasion, it tested 200-day 3 times, in fact, before the price finally gave up and just continued to the downside. Let's have a look back at the cycle previous to that. So this is the 2013 top, November 2013. Bitcoin makes its ultimate high of $1,100 or thereabouts. Then it comes down, comes back up, tests the 200-day, in fact gets above it for couple of weeks, doesn't really like it. It's postured to the downside, indicating trend change, and down it goes. So there we are. It's, those are all of the previous cycles. What that tells me is that Bitcoin is very much likely to test the 200-day moving average before it rolls over into a bear market. Some people are saying, or might be saying, well, Bitcoin got up to 98 and it's rejected, so maybe that was the test. I don't think so. I don't think that was really a good enough counter trend rally. I mean, Bitcoin has dropped 36% from its ultimate high in October, and I just don't think that move is a sufficient counter trend move. I mean, for example, you see this here, that there was a failed rally here, which is similar to the 98k example, then coming down, fails, doesn't get a butt anywhere close to the 200-day, and it comes down again, then it goes up and makes its touch, then it comes down. So my view is that I think that Bitcoin is going to ultimately test the 200-day moving average. Now, it could get above the 200-day moving average and just keep going, because at the end of the day, we haven't printed yet a lower high. We've still got higher lows. I mean, look, we've still got, this was depending where you want to do it, whether it's the wick or the candle body, that was the low, 78k in April. That was the low before. So we're printing higher lows, and this was the low here, very close, of course. If we're using candle bodies, it was 80, 85k or thereabouts. So technically speaking, Bitcoin is actually still printing higher lows. That is why I'm giving it a 30% chance that actually this is this is the market trying to fuck with us, and it could just literally resolve and continue to the upside. That is a real possibility, but I'm not giving it the higher possibility in this case, because we've come from 15 or 16k or thereabouts. We've had a 3-year rally from there. Maybe it is time that it rolls over. We've got the 4-year cycle, we've got a 200-day moving average posture to the downside. We've got, we'll talk about sentiment in a minute, but we've got sort of all of these hallmarks that suggest that there is potentially a rollover coming from 15k to 126k, 200-day moving average posture to the downside, 4-year cycle. Stocks, etc., in the stock market are now pretty overheated. So, there is a very good argument that we are in a bear market. So that's why I'm giving it a higher percentage chance than us being in a bull market. But anyway, let's get back to the chart. So 200-day moving average, really important. I think that the price is ultimately going to revisit the 200-day at some point. It could be sort of in February, towards the end of February. It could be in March. Previously, let's have a look what it did previously. So the ultimate high was 8th of November back in 2021. Then it dropped down through the 200-day moving average. Then it came back up to test it here. And that was on the 28th of March. I remember that because I was in the Canary Islands. And that essentially is where I took profit on the last cycle, having taken profit up here back in March, then repositioning at 30k, then think it was going to 100k like we all did, it not, and then getting out at the 200-day. But anyway, the point is that the ultimate high was on the 8th of November. Then it tested the 200-day on the 28th of March. So that's 20 weeks, so 20 bars, 140 days it took. Previously, let's have a look, the 2017 cycle, ultimate high made its first, its first attempt at getting above the 200-day on the 30th of April 2018, which is in fact 20 bars or 20 weeks, 140 days later. It'd be interesting to see what it, never looked at it like this. This is quite an interesting point. Ultimate high, December 13, drop below, comes back up to test 26 bars, so 26 weeks, 182 days later. So let's say it takes 21 weeks from high to revisiting the 200-day. So what's that? So that was our ultimate high. So 21 weeks puts us, oh, sorry, I got that wrong. So ultimate high, 21 weeks, 2nd of March. So I think, my view is this, is that I think that the price is going to revisit the 200-day moving average at some point in the future. I mean, it would just be so unusual if it didn't, okay? Because it's done it every time in Bitcoin's history. It did it once there, did it once, twice, 3 times there, and it did it once, once previously there. So it always does it, okay? And it's just a question of being patient and unfortunately taking a little bit of pain now and again. But if you are, genuinely worried and you've had a good ride, then just get out and just enjoy your life for a bit. The market's always going to be there tomorrow, next week, next month, next year. It's not a big problem. But for me, I'm a tactical trader and I look at things in this way. And my view is that I think that we are going to revisit the 200-day moving average, and I think that that is likely to happen between now and mid to end of March. I think that's the best sort of time stamp we can put on it. Now, next important thing, 200-week moving average. So we talked about the 200-day moving average, but the 200-week moving average is important. Why is it important? The 200-week moving average is important for us, not in bull markets, but in bear markets. Why is that? I'll tell you why. Because the price always in a bear market revisits the 200-week moving average. Charlie Munger once famously said, if you want to get rich from investing in stocks, just buy a stock or a good stock at its 200-week moving average and you will get rich over time. Okay, now let's take away the 200-day. So we can see the 200-week here in blue running along. I'll make it a little bit thicker so you can see it better on your screen. There you go. So that's the 200-week moving average. Now, Bitcoin always in its bear market either hits or goes below, slightly below the 200-week moving average. But the point is this, whether you buy it on the 200-week moving average, just above the 200-week moving average, you're going to get a good price for Bitcoin, okay? Obviously, there was this scenario in the last cycle where Bitcoin, in fact, got way below the 200-week moving average, and it remained below the 200-week for quite a long time. I mean, almost a year, 260 days. But what we had last cycle was something that really drove the price down, because price came down to the 200-week. If you bought the price at the 200-week moving average last cycle, you would have been paying 22,237 for 1 Bitcoin. Pretty good price, right? Considering where the price is now, yeah? Now, that sort of price of 22K or 20K or thereabouts remained constant for most of the period of which Bitcoin was just below the 200-week. What sent it down further was the FTX collapse. And you can see the FTX collapse right here in that big red candle that comes down. That was the FTX collapse. Now, if we didn't have the FTX collapse, price probably would have remained constant, in my view, of around about 20K, 19, 20K, there, around 19, 20K. It probably wouldn't have had that final capitulation low if it wasn't for FTX. But anyway, point is this, whether you bought Bitcoin at 22K or whether you bought Bitcoin at 16K, that's still a good price for where the price eventually went after that ultimate low. So that was the last cycle. Cycle before in 2017, up for its ultimate high, coming down, hits a 200-week moving average, perfect price to buy Bitcoin. It literally didn't sit on the 200-week for very long. It, in fact, bounced off it pretty aggressively to begin with. Then it came down to fill that liquidity gap and hit it again. But if you were buying Bitcoin at there, $3,000, then that would have been a pretty good price, considering where it went in the next cycle and where it is now. Okay, so next. Similar again, previous cycle in 2013, comes up, comes down, tests the 200-week moving average. I mean, it wicks below it here, but that is basically a great place to buy Bitcoin, having bought it if you did in sort of around the sort of between January and June 2015, you would have been paying about $200 for one Bitcoin. Pretty good price, right? Considering where the price is now. So what do we take away from that? Buying Bitcoin or buying an asset at the 200-week moving average is a pretty damn good place to buy it. So that's the 200-week moving average. Now, taking the 200-week and the 200-day into account, my view is that if we are in a bear market, the price is likely to revisit the 200-day and then ultimately come down to hit the 200-week. Whether it goes below it, I don't know. But essentially, the 200-week moving average come the end of this year is likely to be around about, I don't know, what is it now? 57K. So it's probably going to be about 62, 64K or something like that. Probably a very good place to buy Bitcoin. But ultimately, I think Bitcoin is going to have an ABC correction, which it always does. And that is likely to look like this. First leg down, A. Second leg up to the 200-day, B. And then down to the 200-week moving average or thereabouts, C. Okay, that's what it has done in all previous cycles. You can, go onto TradingView and look at it yourself. But, that is ultimately what Bitcoin does every single cycle. Okay, so if you're looking to short the market, personally, I wouldn't be shorting the market right now, and I'll explain to you why I wouldn't be shorting the market right now. But if you are going to short the market, shorting the market at the top or thereabouts of the B wave is probably the better place to start that short, because then you can take the short all the way down to the bottom. If you're taking a short here, it's going to be difficult because you're going to get in here, it's going to come down, then you can get back up, the price is going to come up, then you're going to be trapped, etc., etc. So you just need to wait for confirmation of a bear market, and I don't really think we've got a 100% confirmation of a bear market at the moment. Okay, so that's the 200-day moving average. That's the 200-week moving average. Now let's take a look at the setup, okay? Let's take a look at the weekly RSI, okay? Weekly RSI is in an interesting spot at the moment, okay? We had, I think it was my last video, we had a 3-day bullish divergence on the RSI, which kind of played out, although it was a little bit weak. It's kind of started here, I think, and then it came up, price rejected at 97. But I still think that price is going to get to that 200-day. So now we've got a weekly bullish divergence. The reason why is because we had a low back in, and I'm not counting a wick here, we had a low of 86,836 back in sort of November. And then we had it was just a little lower the other day when it closed the weekly candle on the 19th of Jan. It was just a little lower. And look, it was 86,505 versus 86,785. So it was just a little lower. Okay, so we've got a lower low technically in price on the weekly. But interestingly enough, we've got a higher low on the RSI here, okay? High low, so lower low in price, higher low on RSI. So that suggests to me that the sellers are becoming exhausted. Could the price drop to 75k and invalidate this? Of course it could, but if the price even goes to 75k, or even down to say 80k, I still think it revisits the 200-day, because then sellers will really be exhausted, and there will be a move against a counter trend rally against that. But my view is I think the counter trend rally is likely to start pretty soon and probably end some point in March. But we've got this bullish divergence on the weekly RSI, which is a pretty good sign. And when you get a weekly bullish divergence, it's something you shouldn't really ignore. But also interesting, when we're looking at the RSI, right? Let's look at the RSI. The RSI is pretty low. It's pretty oversold. And if we actually look at that level that it actually dropped to just the other day, so when it dropped down to this level on 17th of November, that was in fact almost as low as it was back in, let's have a look here. Get this so we can see it properly. So sorry, get rid of this. It's annoying. There you go. You can see it better now. Apologies. So this was the ultimate bear market low back in November 2022, right? And this is where we are now on the RSI. That's where we dropped to, which is about 35.77. So it's in fact pretty close to that bear market low. Okay, very, very close. Okay, weekly RSI only really revisits this area of extreme being extremely oversold in bear markets. So that's something that we've got to take into account here. That suggests to me that either one, this is actually a low in price and we are going to continue higher, or there is going to be a pretty strong counter trend rally. Now, what we've got to take into account is the fact that there are some bearish divergences here as well. So we've got this high here, then we've got this low here, and then we've got another low here. Okay, and we've got price going higher, 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 and then we've got RSI going lower, lower, lower. So that is a pretty severe bearish divergence, which again you can put into the side of this is a bear market, we're in a bear market. Okay, but what's interesting is that it's super low at the moment, and that suggests to me that there's going to be a good bounce, and that bounce would take us around about to the 200-day or thereabouts. It's only a bounce. Remember, we're only talking about a bounce of about 17-18%. Maybe not even that much. Maybe it just goes to 102. Maybe it just goes to 100. But let's say it gets right up to the 200 days, probably about 102, 103. That isn't much for Bitcoin to move. That isn't much at all. And given that we've got a bullish divergence on the RSI, and we've got an RSI that was super, super oversold, because look, this is the RSI back in 2022. Let's go further back. That was the COVID low. I mean, the RSI is literally as low on the weekly as the COVID low. Then this is the RSI down here, back in the ultimate low in 2018. Let's have a look. Again, RSI low. So that, when you look back in history of Bitcoin, what is absolutely clear is the RSI gets around this territory or a little bit lower during a bear market low. So my view is that Bitcoin revisits the 200-day moving average, which causes the RSI to come up a little bit, okay? And then it starts to make its descent down to the 200-week, and so does the RSI, making its final low and then rebounding for the next cycle. I think that is the most likely scenario. So for me, at the moment, I'm just going to sit tight. If I'm wrong, I'm wrong. I'll take the pain. It's not like I haven't taken any pain before. But what I'm absolutely sure of is that at some point in this cycle, Bitcoin will revisit and test the 200-day moving average. Now, just a couple of more things. Let's look at the fear and greed index. I mean, the fear and greed index is just let me find the right one. There you go. Look. So the fear and greed index. So what is considered fear is between 26 and 46. Okay, so essentially, we have been in fear and or extreme fear with us. Do we get to neutral? 43? No, we didn't even ever get to neutral. So we have been in either fear or extreme fear, and most of the time in extreme fear, since basically about the 13th of October, just after the 10th of October incident with the massive liquidations. So this market has been not only in extreme oversold levels on the RSI for quite a considerable amount of time, but also in extreme fear or fear areas for months. Okay, so we're talking October, November, December, so for almost 4 months. And that suggests to me that there's going to be a bounce because everybody is scared that the price is going to continue to go down. And what does the price do when everyone thinks it's going to do something? It obviously does the opposite thing. That's what markets do. So that's something else which I think is really quite important to look at. Let's have a look at the LMACD as well. So this is the logarithmic MACD. This also suggests to me that, you know, there's going to be some form of turn. Obviously, there was a bearish cross here. Price came down. You know, the histogram has just been continually printing red, red, or pink all the way down. But now there's been a turn in the market. Okay, so I think that what will happen now is we'll probably get a bullish cross. It'll come up again, and then probably when we get to the 200-day SMA, it's probably going to roll over again to make the ultimate low for Bitcoin. Which, if we're in a bear market, I think the ultimate low is likely to be probably, you know, the latter end of Q3, beginning of sort of Q4 of this year. And again, I could be wrong, and we could be in a bull market. Okay, and I give that a 30% chance. And it's pretty obvious what will happen if that's the case, because what will happen is Bitcoin will get above the 200-day and it will remain there and it will start trending higher. And then the 200-day will start posturing to the upside. At that point is probably the best point to re-enter the market. But right now, I don't want to do that. I'll just simply wait. I'll hold my positions. I mainly hold Bitcoin. I don't really hold that many altcoins. I'm like 80% or thereabouts in Bitcoin. So I'm happy to sit here and wait and be patient and wait for that 200-day test. Once the 200-day test comes, I'm likely to take some profit there, and I'll be mostly out of the market. I'll probably leave about 30% left, and then if it just, you know, if it's not going to get above that 200-day, then I'll cut my positions at that point. But for me, I don't feel like cutting my positions right now at 87 or 88k, given everything that I've just shown you. Everything that I have shown you is telling me that we are likely at some point, probably in the next couple of months, to revisit the 200-day and then to come back down to the 200-week. So for me, it's a sell at the 200-day and a buy at the 200-week. Pretty simple. But sometimes it's better to be simple Keep it simple, stupid. Okay, so that's it. That's it for today. I hope you enjoyed the video. If you want to join the group, links in the description. Please like and subscribe, and I shall see you on the next video. Thank you very much for listening. Bye-bye.